Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from SmartCon in New York City. Joining me for the segment, we have David Bleznak. He's co-founder and chairman of LitFinancial. We're here to discuss applying blockchain to mortgage lending. David, it's great to have you with us.
Thank you for having me.
What's the inspiration behind LitFinancial? How are you applying blockchain technology to the mortgage space?
Yeah, so at LitFinancial, we're a resi mortgage company. We offer all types of resi mortgage products. So that's spans anywhere from purchase to refinance, second lien HELOCs, reverse mortgages. And we're applying blockchain to reduce our net cost of capital as a balance sheet lender. So for every dollar on our balance sheet, we're issuing our own stablecoin, LitUSD. And the yield from LitUSD and decentralized finance actually offsets some of our capital costs.
So how do you see stablecoins reshaping treasury and lending operations in traditional finance?
I see it being a pretty impactful and novel financial instrument that's going to change the way lenders capitalize themselves, do transactions, record transactions, provide rewards to customers. It's really impactful. It's going to change the way everybody does business.
And you recently adopted Chainlink's cross-chain certificate standard for LitUSD. How does that integrating Chainlink's infrastructure help to advance priorities and bringing mortgage on chain?
Chainlink's integral. I think the blockchain itself inherently reduces trust in any transaction. Chainlink provides that same level of reduced trust that you need in any sort of business relationship for any off-chain transaction. So they're providing the insurance that what we're selling is in fact what we're saying we are selling.
Yeah. So as real world operations like mortgages, as an example, start to go on chain, what infrastructure or operation standards should, what do you think is going to matter most to institutional adoption of that?
I think that there's going to be more and more adoption as more and more regulatory clarity comes to light. So we had the Genius Act most recently pass, and that framework's giving us a path to issuing LitUSD, our own stablecoin. And as more regulation comes to light and gives us clarity, it'll give everybody in the space the opportunity to implement their own, their own version, their own implementation of blockchain and reduce their capital costs and increase their efficiency.
So you had mentioned that LitFinancial is in the residential mortgage space. Does that change anything for the consumer in terms of what the process is like?
So it's pretty obfuscated for the consumer. They don't have to change anything in terms of their behavior or the process for getting a loan. You can go online, you can call LitFinancial directly, you can get a loan from us, and the whole process is smooth and easy. You don't have to do anything different. In fact, you might just notice a better rate on your loan.
Because you're also getting the yield on the other side.
That's exactly right.
So looking ahead, what developments do you expect to shape the next phase of blockchain and tokenization, not only just with mortgage, but traditional finance in general?
I think it just creates more transparency, reduces the trust between parties. I think you're going to find more and more real-world applications, real-world assets come on-chain. And when that happens, you're going to see a boom in the efficiencies and the amount of business that's happening, whether it's in private credit, with trading of equities, whether that's stocks and bonds, or issuance of mortgage loans like we're doing.
I want to ask one more question as it relates to the residential mortgage space. In theory, if you have title on chain, you have all of your inspections and so forth on chain, mortgage on chain, that should make the process timely and more efficient.
Absolutely.
Is that the aim of the industry? Like,
that is one goal, and time is money, right? So we can save on money on the costs. Our cost of capital, as I already mentioned. We can also save on time, which ultimately reduces it can reduce the time it takes to close a loan.
Right.
It can reduce the time it takes to process a loan. And all of those things save us money as an issuer, as an originator, and ultimately makes us more profitable as a company.
Right. Appreciate the insight, David. Thanks for joining us on Trade Talks. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.